The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mozo.
Hello, this is the COB, all the stuff you need to know about the day in business and markets. I'm Juliette Sali. It is Thursday, the 5th of October. Well, we have seen quite a good session coming through on local markets today. We had that positive lead coming through from US equity markets. We had that reprieve in the oil market with that drop of 5.6% for the global benchmark. And certainly markets here rallying into the close or at the highs of the day with the CBO 200 index up by 0.7%, and of course the ASX 200 also rebounding. We are seeing it up by about 43 points as we head into the close. When it comes to, of course, what we have been looking at, though, it really was about this oil reprieve and some interesting momentum of when that flows through to the Bowser. When will we start to pay less for petrol? How will that feed through into the inflation picture? And of course, that's going to take some time, but maybe we start to see a little bit of a pullback coming through in that December quarter inflation. Of all of that, of course, sending markets higher, as well as we saw that pullback in US yields and Asian stocks coming off those 11-month lows as well. There's also been a lot of speculation when it comes to the currency market about potential yen intervention, and it was interesting to hear yesterday from the Finance Minister Suzuki saying, of course, that those words that we've heard so many times before, that yes, they are looking at market moves very closely, but there was a lot of speculation that perhaps there had been some intervention because the BOJ really does not like it when it gets towards that 150 level to the dollar. Well, I've been talking as well, of course, about what's been happening in the energy space, but let's look at some of the sectors in the overall market. REITs always very sensitive to what's happening with rates, and as I mentioned, we did see that pullback in US Treasury yields, which boosted some major growth stocks. We've got Stockland up by 1.4% on the close, Mirvac up by about 1.7%. When it comes to the tech sector, which also is movement in terms of where the yields move, Xero is up by around 3%. Block firmer by around 0.4%. I believe Block had a pretty hefty sell-off yesterday because it had its price target cut by one of the brokerage firms. So a little bit more buying coming through back in those tech players today. Energy, though, is of course where it's at, and we saw a basket of energy stocks hit a near 15-month low today on that pullback in both Brent and WTI. Worth noting in electronic trade during the Asian session, though, we have seen oil claw back some of those losses, but still you've got some pretty hefty losses coming through from our energy players. Woodside and Santos, though, are UBS's preferred picks, despite, of course, the sell-off that you're seeing today. And utilities always one to look at as well when it comes to any move in bond yields, which is basically the story of every day at the moment. We've got APA Group up 0.9%, AGL Energy up 2% to $10.55. Let's look at some of the top stories we've been following here at ausbiz. Pexa planning to acquire Smoove, valuing the UK-based company at £30.8 million. The deal is expected to be completed in the fourth quarter of this year, with the acquisition to be funded through cash currently held by Pexa and a newly established facility. And I spoke to the CFO, Scott Butterworth, a little bit earlier.
So those 75 firms process around about 7% of the remortgage flows in the UK. So that's quite a sizable reach in its own right in that segment. And then in the sale and purchase market in the UK, those firms process around about 3%. And to put that into context, there are around about 4,500 firms in the UK who process sale and purchase transactions. So finding a panel manager such as Smoove to give us access to a reasonable number of those firms is actually a great starting point for us for that product.
All right, well, elsewhere, Newcrest Mining will pay a special dividend of $1.10 US on condition of the Newmont takeover becoming effective. The payout will be made on October 27th if all goes to plan. And we have been seeing shares in Pexa down today by almost 2%, $10.92. Newcrest Mining up by about 2%, and that's really in line with the rebound that you have been seeing across most of the gold players today. Well, we had a sector of the day today, and that was the financials.
Necessarily a view from Morgan Stanley about therefore what price you pay for these banks, because I think it's a really good opportunity to remember these are cyclical businesses. It's been so long since we had a proper economic cycle. The last fair income recession was the early 90s. Of course, COVID was bad, but super short and massively supported by government stimulus. And so if you think about going back to those early 90s when Westpac and ANZ got themselves in a bit of trouble, we need to remember these are cyclical banks. They are exposed to the broader economic cycle, the housing market in particular. So I don't think there should be any surprise that if we do end up in tougher circumstances, that profits growth will be hard to come by.
Across the board increase. I think CBA is the best at the moment, so that's at about 2.1, but the average for the big four banks is about 1.8. So they haven't experienced such a big uptick in net interest margins and the NIM, as I guess the cash rate movements have been probably a bit too aggressive for them to really capitalise on that. And we're starting to see a lot of mortgage stress news come through. I think it was a pretty large portion, depending on which market you take. About a third of households that have a mortgage are in that mortgage stress category, which is paying about more than 30% of their income to their mortgage. So we haven't seen like the delinquency rates really tick up just yet. Very marginally, it's very low in the US. Their average is like 2.5% in sort of delinquency rates, and it's at 0.5% at the moment. But definitely something to keep an eye on. Here in Australia, it's 0.75%. So something to keep an eye on if people are struggling to make back those repayments. Again, we sort of saw through COVID that the banks have solutions for those that can help people but probably benefit the bank in the long term. So I think that will probably occur again over the next year. They'll have a small hit to their revenues and therefore their profits, but obviously, increase their debt.
So are you in the banks at all?
Well, welcome to the COB, James Swirling from Ebury. I mean, we're talking there about banking, but you could arguably say energy was one of the sectors of the day too. A fall in oil prices, a retreat in bond yields. Can we come out from under the doona, James?
Yeah, it's pretty interesting having a look at that with vol having come down a little bit after making multi-month highs, and oil. I think that all supports the global growth story. Which is why the US dollar, which had been moving up so much recently, has just come a bit off the boil. The Aussie's going pretty well on the basis of global growth story, so moving up, but I think just the main outperformance against the US dollar. So for the optimists out there in the market, there's a feel that Aussie US has bottomed out a little bit.
Okay, we're also looking ahead in terms of what the Fed's going to look at with those jobs numbers coming through from the US tomorrow night. Have you been kind of surprised in some of the strength of the other data we've been seeing?
Not really. Interest rates on the whole don't affect the American consumer as much as what they do over here. There's a lot of stimulus programs that are in place to support people, so that is certainly helping with inflation. It also helps that energy is denominated in US dollars. On the other side of things, though, looking at the data for tomorrow night, the unemployment numbers, if you have a look at the ADP number coming in, particularly in the private sector, the actual number has come in quite a lot weaker than ADP's projection in 4 of the last 5 months. So on that basis, you'd be if the trend were to continue, you'd be expecting quite a soft number, particularly in the private sector tomorrow night. That would actually be pretty good for those who are sellers of US dollar, because it would soften the Fed's standpoint on further rate hikes. Again, global growth story gets fed, so again that would be technically USD weakness and positivity for Aussie, Kiwi, and CAD.
Okay, so you're looking there very closely in terms of what we're seeing in the currency markets. Have you been watching very closely what's been happening with the yen? Because I mentioned the thought of potential intervention here.
Yeah, most definitely. It's interesting hearing your point a few minutes ago around that the central bank doesn't like US yen going beyond 150, but I think exporters do. It certainly puts them at a very competitive point of view, particularly in the machinery market against the European and American counterparts. Yes, imports would be more expensive, particularly energy, but inflation's not ridiculously high there. So I think sort of quite secretively, policymakers wouldn't be minding things too much, even though they are threatening action in the markets. I still think there could be some further downside on the yen as we come into the next few weeks.
In terms of the US dollar, I mean, it really does seem like that is the only place to hide at the moment. We've been looking at some potential moves in other cross rates too. Are you seeing the Swissy as an attractive move too?
I was, until they didn't raise rates the other week. I thought it was quite a surprising move. So that we have seen that unwind somewhat. So I think longer term, I wouldn't be so much a holder of Swissy. I think though the currency that I'd still be trying to get into, I think there's some more upside in this, is the Kiwi dollar. I think that there's a little bit more in that one, particularly with the slight change of language that we saw from the RBNZ statement yesterday after the rate decision.
Yes, well, that was an interesting one in terms of whether or not the RBNZ has peaked with their cash rate at that 5.5% level. Potentially more moves from the RBA. How are you seeing all that play out?
Yeah, I think one of the things that perhaps surprised the market was Bullock's language seemed to be just continuation from what we saw from Phil Lowe. On the other side of things, though, I do believe that we aren't necessarily done with the rate hikes. Inflation, albeit it is coming down, is still a little high. There can be more room to go. These recent energy price rises would definitely feed the inflationary picture even further. Plenty of businesses that we look after are reporting that they're absorbing costs, and that suppliers of theirs have still got all kinds of supplementary costs in their price rise. So there's plenty of inflationary pressures building up. So not necessarily done. I think that the market still is pricing in a small chance of a rate hike as well. So perhaps that language changes on the Melbourne Cup Day statement, but I'd still be surprised if there were to be further rate hikes, that it would happen as soon as next month.
All right, James, thanks for your insights and joining ausbiz James Swirling from Ebury.
Thank you.
Well, we are rounding out the Thursday session. Let's have a look at some of the market leaders of the day. Weebit Nano up by almost 5%. Remember, tech got hit very hard yesterday and Weebit was an underperformer. So coming back today, we've also been seeing some big moves coming through in those gold players. So Northern Star there up by 4.6%. A close there of 47 cents to $10.66. This is the diversified Australian gold producer. It also said that, Simply Wall Street says shareholders have endured a 30% loss from investing in the stock 3 years ago, but certainly coming a nice comeback today. Genesis Minerals also looking pretty good, up 4.5%. Life 360 up by 3.8%. And Neuron Pharmaceuticals up by 3.2%. When it comes to sectors, certainly the real estate sector was a performer today, an outperformer, and also that gold momentum really driven by Northern Star. Let's have a look at what we saw in terms of the laggards today. Core Lithium was a laggard, down 5.7%. That is a drop of 2 cents on that smaller stock, 37 cents. We saw Sayona Mining, it always seems to be in the list, down 3.7%, closing at 9 cents. Aristocrat also lower, down 3.3%. And Viva Energy with a loss of 3%. It's kind of interesting when you look at the energy players, because that was where you saw all the weakness coming through in the morning and actually kind of dragging the market a little lower, even though we had that rebound coming through from Wall Street, and that was really on the drop that we had seen in crude oil prices, but they recovered somewhat in the afternoon session, and you saw the heavyweights, the likes of Woodside and Santos, only off by about 0.7%. Worth noting, UBS did increase their price targets for both those big heavyweights, but certainly Viva Energy was the laggard in the overall energy space, down by 3.1%. Okay, quick look at the small cap leaders and laggards as well. We saw Strandline Resources up 14.3% in the small end of town, Dacian Gold up 10%, and let's have a look at some of the laggards. Bowen Coal was down by more than 11%. Redbubble there was down by 7%. Well, having a look at what we are looking out for tonight, US initial jobless claims data, always a key one before the non-farm payrolls that come through on Friday. You've also got the Challenger job cuts report, so many reads on the US jobs front this week. We also have the trade balance being released in the US, and Levi's is among those earnings. That's important because, of course, it gives us an overall pulse of how the American consumer is faring. And we did have James give a pretty interesting point in terms of the fact that so many of these US mortgage rates are fixed for such a long time, their hip pocket not being hit perhaps as hard as ours with these big moves in rates. Okay, in terms of what we are looking out for tomorrow, China's markets, of course, remain closed, the end of Golden Week though, and the key one, the non-farm payrolls for September, is that going to move the dial for the Fed? We also locally have Centaurus Metals holding its extraordinary general meeting. That is it for the day, but let's have a look at where the market has finished up, because we are well and truly closed now. The COB 200 up 0.7%, and the ASX 200 up by 0.6%, 43 points, 69.32, back above that 6900 point level. Will we get a rally on Wall Street? Will we close back above 7,000 on Friday? Well, of course, you're going to have to stay tuned to ausbiz tomorrow to find out. But at our last virtual investor event, we asked if you were interested in adding alternatives to your portfolio. Nearly 70% of you said yes. So we're bringing together expert asset allocators to share how they build a portfolio in a space that has traditionally been out of reach for retail investors. We've also got managers from funds right across the spectrum of alternatives. Join Koshi for Essential Alternatives. It is happening 18th of October from 11 a.m. Eastern Daylight Time. It is free to register, and you can see the full agenda at ausbiz.co/essential. And just to note that a lot of the strategies and products being discussed are only suitable for wholesale or sophisticated investors. That is it for the COB for today. We'll see you tomorrow.
The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mozo.